Picture this. It's March 9th, 2026. The stock market is in an absolute free fall, gripped by panic over a new global crisis. But then, by the time the closing bell rings, it pulls off this incredible, historic reversal. So what happened? Was it new data? A major policy shift? Nope. It was just 7 words. In this explainer, we are going to break down exactly how one single, unverified sentence completely flipped the market on its head, and what that means for every single one of us as investors. And here it is. This is the sentence that stopped the panic dead in its tracks. It was a seemingly casual, off-the-cuff remark from President Trump in a midday interview. I mean, just listen to how vague that is. Very complete, pretty much. There was no signed treaty, no verified reports from the ground, just these 7 words. But you know what? For a market that was desperate for any shred of good news, it was more than enough. And this slide right here shows you the impact in black and white. Just look at that. The S&P 500 went from this gut-wrenching low of down 1.5% to finishing the day strong, up almost a full point. That's a massive 2.3% swing in just a few hours, and it all pivoted on that one single quote. Okay, so let's rewind the tape. Because to really get a feel for how dramatic this reversal was, you have to understand the sheer panic that was in the air that morning. This wasn't just some small dip, folks. The market was genuinely pricing in a catastrophe. It was, a textbook perfect storm. The market was already feeling a little shaky after a weak jobs report came out the Friday before. Then, over the weekend, geopolitical tensions just exploded in the Middle East. And that all led to a blockade of the Strait of Hormuz, which, as you know, is a critical artery for global oil. So yeah, when that opening bell rang on Monday morning, the sellers were in complete, total control. And that fear? It had a price tag. $119 a barrel. That's how high crude oil spiked that morning. The market saw that blockade and its mind immediately jumped to the worst-case scenario, a massive supply shock that would pour gasoline on the already raging fire of global inflation. And then, right when the selling was hitting this fever pitch, everything changed. A single news alert flashed across trading screens around the world, and in an instant, the entire story that was driving the market got thrown into reverse. Now, just look at this collapse. The second the president's words hit the airwaves, the price of oil, the very thing that was causing all the panic, it just fell off a cliff. It cratered from that morning high of $119 all the way down, closing below 85. What an absolutely stunning turnaround. And of course, the rest of the market followed oil's lead immediately. The VIX, which is basically the market's fear gauge, it plunged over 13%. Tech stocks led the charge back, and all the major indices ended up finishing the day solidly in the green. The panic was over. But had anything actually fundamentally changed? See, to really get to the bottom of what happened on March 9th, and more importantly, to learn from it, we need to look past the charts and into a little bit of psychology. We've got to understand these 2 competing forces that were basically at war inside the market's mind that day. And this brings us to the idea of System 1 and System 2 thinking. So System 1 is your gut instinct. It's super fast, it's emotional, it's automatic. It's what makes you slam on the brakes to avoid an accident without even thinking. System 2, on the other hand, is your analytical mind. It's slow, it's logical, and it takes real effort. It's what you use to weigh the pros and cons of a big life decision. And on that day, the market was running on pure System 1. This table, I think, just captures the whole internal conflict of the day perfectly. On one side, you have the market's System 1 brain, hearing the president and just screaming, "The crisis is over, the risk is gone, buy, buy, buy." But a calmer, more analytical System 2 brain would have taken a step back and noted the facts, right? The statement was totally unverified. The ships were still stuck in the strait, and hey, while the VIX was down, a level over 25 still signals a lot of caution. The market simply reacted first and asked questions later. Okay, so this brings us to the crucial point. What do we, as long-term investors, do with this? How do we keep our logical System 2 brain in the driver's seat when the market's emotional System 1 brain is screaming at the top of its lungs? This quote from the CEO of Longbow Asset Management really gets to the heart of it. These moments of mass emotional panic are often incredible opportunities for the disciplined, long-term investor. But capitalizing on them means you have to have a playbook ready to go before the panic even starts. And this slide right here, this is that playbook.
It's pretty simple, really. First, don't ditch your protection. Selling your energy hedge based on a vague quote while the physical risk is still there, that's a classic System 1 mistake. Second, leave your core holdings alone. The reason you own a great company for the next decade has absolutely nothing to do with this one headline. And third, and this is probably the most important, wait for actual data. The upcoming inflation report was always the key data point, and one comment from the president didn't change that at all.
And that really leaves us with one fundamental question. The market is always going to have these moments of panic. Headlines will always try to trigger your emotional System 1 response. The only thing you can actually control is your own process. So the next time the market is in a free fall and your gut is telling you to just hit the panic button, you have to ask yourself, who is really in charge of my money? Is it System 1 or is it System 2?